What's going on YouTube? I'm Yukariel, and today I'm going to show you guys how to trade like the banks. So I'm just gonna go to replay mode here. I'm already on replay mode and I'm on British Pound futures. And just a quick note, if you guys hear anything like a lawnmower in the background, is because I'm back at home and it's not as quiet as it is in my apartment. So my brother's out there cutting grass. So you're just gonna have to deal with it. This video is gonna be edited, so hopefully some parts you'll hear it, some parts you won't hear it at all. It's just, I can't do anything about it. It is what it is. But anyway, this is how you trade like the banks, okay? And the banks, they trade using technical analysis and fundamental analysis. And technical analysis is anything from moving averages to support and resistance. Anything in between that, and all of that is technical analysis. Fundamental analysis is things like that you see. It would be news, CPI data, forex. I forget what you call it, but if you go on fx.com and look at some of the news that they release, that would be a part of fundamental data. So banks use that. But if we're just gonna go all straight statistical, technical analysis data, this is how they trade, right? So you have many banks out here that trade, and they all have different biases on the market. Some believe that the market is going to go up, some believe that the market is going to go down. So we're just gonna trade as if we're a bank and we have $50,000 in equity, and we're looking to maybe have a 5% increase on the month, right? So we're here, it's May 8th, right? And we want to maybe have a 5% increase. So again, a $50,000 account. Let's maybe pull up and if you guys haven't seen my YouTube video here, my latest YouTube video that I just created, if you suck at trading, you're complete dog water at trading, right? I think you guys should give this video a watch. Suck at trading, watch this video. I think it'll be pretty useful. It's not guaranteed. You're not going to be a guaranteed profitable trader. No matter what video you watch, trading takes experience. It takes discretion. It takes all of those things above. But anyway, let's just go to our calculator here. And 50,000, right? So we have $50,000. And we want to have a 0.05% increase on the account. So we want to make $2,500 by the end of the month, right? We're a bank and we want to make $2,500 at the end by the end of the month, right? So we started at May 8th and we want by at least May 31st or to today's day. Today's day is May 16th. We want to have a $2,500 increase, right? That's what we want. So I'm here on British Pound. Let's just say I'm a bank and I think markets is going to go down. I looked at news. I'm looking at technical analysis. I have analysts that are in my trading room and they're telling me to sell. So I sell, right? And I also have a stop loss because we're not a terrible bank. We have a stop loss and we have a take profit. But hold on. We're trading like the banks. The banks don't give a fuck about your stop loss. They don't give a fuck about anything that you believe is what, as a retail trader, what you think is going to happen. So actually we're going to get rid of that, and what we're going to do is we're going to put a level where we think this price is likely to reject from, right? I'm going to say here, I'm going to say here, and again we have $50,000 in our account, or we have $50,000 in equity. So here we go. All right, we're just going to play market forward. We're on the 5-minute time frame. Let's play market forward and see what happens. Price is moving down. Let's see here. Struggling. Looks like it's going to keep going up. Let me extend these levels out here and here. Okay. Nice. So we just won this trade, right? We just made, I think that was $80. I think what I'm gonna do here, here's what I'm gonna do. I think I'm going to up the position size to 2. All right, I want 2 position sizes. Again, we want to make $2,500. We want to increase our account earn in equity by 5% by the end of the month. That's what the big guys at the top say. That's what BlackRock wants, right? I don't know. That's just what they want. So there we go. All right, we're gonna sell again. And we also have a new level where we think price is likely to, based on statistical data, price is likely to reject here. All right, we're just gonna put this level in this area, just like that. So if price comes up to this level, guess what we're gonna do? We're gonna figure out what we want to do. Maybe we want to close the trade. Maybe we want to hedge. Maybe we want to add into it. Dollar cost average or something, right? Let's see what this is. This is $162. Boom, just like that. We're risking. How much we're risking is how much we're looking to take. Let's go. So price came up to our level. Here's what we're gonna do. We're gonna go ahead and sell again, and then we're gonna move this to 182, 187. That's fair enough. So the previous level of support is what we're gonna do. We're gonna move that to there. We're just gonna watch and see what happens. We also have another level of support where we can add into it. Made a higher high. Let's add in there. Let's move in. This is how the banks in this essentially trade. Here we go. We came break even, and then we pushed down a bit more. Let's see here. And then we just won that trade. So here we go. We only needed to be right one time. That's crazy, right? Right one time for us to profit. As a bank, we were wrong here and here. And guess what? We were right here. So here's what I'm gonna do. I'm gonna add a position in. I'm gonna add this here. I'm gonna copy this, add this here. I'm gonna copy this, and I'm gonna add this here. All right. So again, we were wrong here, we were wrong here, but then we were right one time, and guess what? We profited. That's insane. That is insane. And then we also have another level where we would add in the trade. So I'm just gonna move this up, just to show that it went into a loss, but overall it was a profitable position. That's insane. We're gonna place one more trade just so I can see if I can get my point across to you guys. All right, let's remove this. Let's remove this. Let's remove this. All right, just so we can get a clear vision of what's going on. Okay, so price came down. As you can see, it came down here. Price came down, and next thing you know, it shot up. So we have a support here, and we have some resistance here, and next thing you know, price came back down to here. I'm expecting price at this level to bounce up. Let's buy. As a bank, we're gonna buy. So price bounced off of this area right here. Guess what? We had the same plan. If it comes back down to this level, we're gonna buy. And we also have a resistance up here, but we're just gonna go ahead and say that we want to make 125 on this trade. And what you can do as a trader, you can set an alert so that when price comes down to this level, you'll be alerted, but you won't be kicked out of the trade, right? You'll get an alert. TradingView will send you alerts to your phone or to your laptop. It'll ring or do whatever you want, right? And you have the choice as a trader to either do one or two things: add into the trade, close the trade, or depending on your broker, if it's special or not, you can hedge. Yeah, you can just hedge, right? So this is what we're gonna do, right? Let's go ahead and play price forward. Let's see what happens. And we win that trade. So we're not quite there yet. We need 2,500, but we're doing pretty good, right? We have a nice win rate. Very nice win rate. Let's see here. I think price is going to keep going up. I do. I think it's going to keep going up, so I'm going to buy. I'm gonna zoom in on the price here. Let's see here. I want $75 for 100. Okay, cool. So let's put our level here, and then we also have another level here. So let me move this out of the way. All right. As you can see, we don't have any moving averages on the chart. We don't have anything special, just rectangles and price action. That's it. That's all we have on the chart. Let's see here. So price came down to that level. Let's buy. Let's move it down a bit. It's 125. Again, if it shoots through this level and it comes to that point, then we're gonna do what we want to do, which would be to buy again here, adding into the risk, but then dropping our average. All right. So here we go, and we won that trade. Simple as that. Wow. What's going on here, right? What's going on? What's actually happening? This goes against every single rule that I thought that you were supposed to. You're not supposed to add into me losing trades. You're not supposed to. You're not supposed to double down. You're not supposed to average down. Listen, there's one thing that I learned in the stock market, right? When you're investing, as an investor, your job is to invest in what you think is going to be a profit to you, right? If you believe in it. If you believe that this stock is going to go up and you buy and it doesn't go up, guess what you do? You get in at another level because you believe that at some point price will go up and you'll get out, break even, or at a profit, or at a big profit, small profit, big profit, small loss maybe. But you believe that price eventually will reverse. And that's what we're doing here. And if you just repeat this process, eventually, I'm not saying that you won't take any losses or you won't go into drawdown, because you will eventually take a loss and you will go into drawdown. As you've seen in there, as you've seen here, we've literally gone into drawdown plenty of times. So the point is, do this over and over and over again. Withdraw your profits, right? How many trades did we place? I think this was 2, maybe 3 outcomes, three trades, right? The trade only ends when you choose to liquidate your whole account. If you're still adding into the trade, you haven't closed the trade yet. You only end the trade when you choose to liquidate the whole position. As in, okay, you know what? I'm going to sell everything, right? I'm going to sell everything. I'm done. I'm out. That is when the outcome is over. But if you're still in the trade and you choose to add into the trade, well, it's the same trade. You're just adding in, right? You're just adding in. The point is to add in to where you think market is to likely reverse at. We don't need none of these rectangles. This isn't some sort of predictive factor, right? This is just where we think price is likely to reverse. If we remove these rectangles, the same thing applies, right? What are we doing? We're just buying low and selling high. That's all we're doing. Buying low and selling high. We're not doing anything crazy. We're not using a bunch of moving averages, MACD, liquidity grabs, upscale, downscale. We're not doing any of that. No fair value gaps, none of that. We're just simply buying and selling as the average Joe Schmo that works at a bank. All right, that's all we're doing. Okay, I'm gonna place one more trade, and we're gonna use our senses. We're gonna use our logic, right? I'm not even gonna put anything on my chart. I'm just gonna press buy right here, and I'm gonna manage how much I think that price is likely to go up. So 150. I'm gonna drag this up here to 150, right? I'm dragging my risks down, my stop loss down to the previous support level to see, because I'm basically doing a 1-to-1, right? A 1-to-1 gives me a 50-50 chance. So I drag this down to this level to see how much I want to profit, and then I get rid of it. Just press X on it. What you can do is put some sort of alert right here. And then that will give you the indication to either A, again, get out of the trade, hedge, or add into the trade. All right, so that's what we're going to do. So let's play price forward. Didn't quite come out, didn't quite touch it, but it came down to that level. see here. Here's what we're gonna do. I'm just using this line as an alert, right? Okay, so it came down. We're gonna add into that trade. As you can see, it drops the average. You can leave this TP here, but for me, I like to keep it simple and just move it down to 125 where I previously had it, so that I keep the same 1-to-1 risk to reward ratio, and then we can just move this down to that next support level, right, or next resistance level. So when price comes down to this level, we can just add in again. So we have 4 contracts here, and we're just gonna play price forward. If you have good enough patience, then this is especially for you. So as you can see, if we repeat this process of taking the trade, not being scared, but taking the trade, knowing that each trade that you take, you can roll out of at either break even, small profit. So here's what I'm gonna do. I'm gonna go ahead. I'm gonna fast forward. I'm gonna jump to real time, and I'm gonna show you guys the win rate here, and it's gonna be insane. Right? So as you can see, the win rate is 100%. Our best trade was $237, and we have 837 profit in cash. Right? If I was just to trade with the tightest stop loss and gave my trade no room to breathe, then my win rate would be significantly lower, and it would be a lot harder for me to get into profits. Not saying that this strategy doesn't work. If you use a stop loss, you could very well just stop yourself out of a trade and then add into the next zone, right? The next zone that you believe price is likely to reverse at, and that will cut some of your losses. But I like to keep my win rate at a certain point, right? I want to have 100% win rate. I want to have a 99.9% win rate. So that's what I'm going to do. I'm going to cut my trade when I think that I'm in enough profit, right? And this is just the strategy that I use. I use a 1-to-1 risk to reward ratio. I use zones to manage risk, not to use it as a predictive factor, but to manage risk. Here's what I'm going to add into my trade, or here's where I'm going to cut my losses, or depending on the broker that I'm using, here's what I'm going to hedge if prices keeps moving against me. And hedging is a different strategy that I can get into at a different time. It takes a different broker. You can't hedge on TradingView, unfortunately. You would have to use a different type of market system or a different broker. But I can show you guys that in maybe FX Replay. I actually have, I think, a video of me hedging. I'm not sure, but I do have a few brokers in mind that I would like to test out, and I know that they let you hedge. But most regulated brokers, I believe, most brokers don't really let you hedge, and that's pretty unfortunate. But again, this is 100% win rate strategy, and I don't really see too many people on the internet, or at least in the trading industry, talking about this, because it's not necessarily a hard strategy to implement. It just requires you to have a certain amount of capital, a certain amount of discipline and risk, and it requires you to realize that each trade that you take, you can come out profitable, break even, or at a small profit or loss, right? So I appreciate you guys for tuning in. You guys stay safe. Peace out.